We're joined once again by Chhad Aul from SLGI Asset Management. Thanks for sticking with us. Mark Carney, our CTV News colleagues, telling us expected to call an election on Sunday, and it'll be just a few weeks out, the actual national vote. What do you think investors will be paying attention to?
Yeah, and it's a great question because, of course, for voters, tariffs are top of mind. Who's going to be, best to sort of handle the trade war? But I think investors and probably voters, as we get a little bit more into the campaign, will be looking at of the two leading parties, who's going to do more in terms of improving Canadian competitiveness in the ways that we can control things. I think a great example so far this year has been, if you look at Europe, the moves that the Germans have made in terms of freeing their fiscal constraints is a good example of, in reaction to a change in U.S. policy, how a country can sort of, look at their own competitive, some of their own self-imposed constraints and really improve their position. Of course, investors have loved it. European shares are doing exceptionally well. The euro is bouncing back. So for Canada, if we look at things like that, they're already kind of percolating to the top. Energy policy, of course, narrowing gap between the two leading parties in terms of both saying that they want to make the area more competitive, make this a leading position for Canada, improve export, east-west pipelines, et cetera. I think investors are going to be looking for now. Let's see some substance, right? You're saying the same things.
Yeah.
How are you going to implement that? And I think these are going to turn into major election issues, probably for broad voters, but certainly that's where investors are focused.
I do get the feeling that stultifying bureaucracy hangs over the economy, in that it can take years for a mine to be approved, or even a residential housing development.
Right.
Of course, politicians always talk about cutting red tape. I wonder, is a bit of a chainsaw needed here?
It's right. Deregulation, I think, is a major effect that's needed in the resource space if we need to move quickly, which I think it's becoming apparent that we do, to broaden our export markets, as we talked about earlier, and becoming more of a global player, less reliant on a single trading partner. We cannot do it with the current setup around regulatory. So that would need to change and change quite rapidly.
We had David Rosenberg on a while ago. He says Canada's deficit situation is not that bad, comparatively speaking. That leaves room for corporate tax cuts, but they could be a political hard sell.
It's a good point, and we do. I find Canadians, we tend to talk a lot about our deficit, but if you look at the rest of the world, he's absolutely right. We are not in that bad a position. I think that, which is a good thing coming into, a game changer, let's say, in terms of our place within the global economy. Let's use some of that space, and the government can, to improve competitiveness. Again, corporate tax rates, another great example. Deregulation in certain areas, promoting infrastructure to, again, broaden our export markets. These are all, we're finding those two major parties are coalescing around these ideas. Let's see some hard facts and policy proposals as we get close to the election. Again, that's what we as investors are looking for.
One thing that seems to be particularly challenging, though, is, resources are all very well, but the modern world, a lot of wealth is created by intellectual property.
Right.
And, Canada brings in Northvolt, a foreign battery maker. Where's the Canadian intellectual property in that?
Yeah, and we can't completely get away from that either, right? I know it's kind of interesting where, a lot of the conversation today feels like we're talking about the economy of the 70s. We're talking about, traditional resources here north of the border, south of the border, talking about bringing back manufacturing. Let's not forget, we are in an information economy. We're moving fast into an AI-driven economy. The way forward has to also include significant focus on developing that talent at home, funding Canadian startups in these in these technology spaces. And again, that all has to be part of the equation.
What about forcing our pension funds to put more of their resources in Canada?
It's a tough sell because it does change the Canadian model. Again, as an investor, I don't necessarily think that our mature companies need that sort of forced investment, let's say, from the Canadian pensions. However, if it's a bit more targeted into venture spaces, again, supporting Canadian startups, I think that is something that would be more broadly palatable and quite a positive for the Canadian economy.
And maybe preventing them just from getting bought by foreign companies when they gain scale. Just say no.
And in the new world, that's probably something that's going to be more and more likely.
Yeah. Thanks very much, Chhad.
Great to be here.
Chhad Aul.